Hey family, this is Timalyn Bowens, America's favorite EA, and in today's video, we are going to cover how to fill out a 2024 W4 for somebody that is head of household. All right, so if you are single, you can check out last week's video. If you are married filing jointly, next week is going to be the video that you want to look at. But this is for all of my taxpayers who are single by definition of single and married, and they provide more than half of the upkeep for a dependent. So in today's example, we're going to use Raymond, better known as Ray Campbell. So for step one, we want to make sure that we have your name the same way that it shows up on your social security card, which should also match the way that it shows up on your last tax return. So we have first name and middle initial here. So we have Raymond E. And Ray actually has three middle names. If you know those three middle names, let me know in the comments. And if you are in a situation like that, you will just put the initial of your first middle name the way we've done here. So we have Raymond E. Campbell, social security number 316-89-5000. His address is 356 Go Home Roger Boulevard, and he lives in Rochester, Michigan, zip code 48306. Okay. Now, like I mentioned, today's video is for those of you who are filing as head of household. To qualify for head of household, just real quickly again, you have to be unmarried and pay more than half the cost of keeping up a home for yourself and a qualifying individual. This could be a parent that you care for as a dependent. This could be a child that is your dependent. This also includes adopted and foster children. Okay? Now, steps 2 through 4, this is going to be used if you have multiple jobs or another stream of income that you would like to take into account. For this first example, let's just leave it pretty easy. So we're going to skip step 2 because we're not going to use the estimator at irs.gov/W4 app. Now, if you want a more precise estimate, you can use that app and it'll tell you what to put where. Okay. But again, this first example, let's go back to when everything first started. So we have Tamara, who is a teenager. She's under the age of 16. So we are going to put 2000 right here. So if you were head of household, for each child that is under the age of 16, you were going to multiply that number by 2000. So right here, Ray is only responsible legally, right, for the upkeep of Tamara. So we'll put this 2000 here. He has no other dependents, so we'll leave this as 0. And this total here for line 3 is going to be 2000. Okay. Now, we know that he has his own limousine company, but for this example, he's working a job. Okay. So we'll leave this blank. So no other income. We'll say that he uses the standard deduction. So we'll put nothing here and no extra withholding. Ray just needs to sign and date this and give this to his employer. So again, if you are head of household and you have one dependent that is under the age of 16, you're going to fill out your information here in step 1. Then you're going to go to step 3, put in the 2000 times the amount of dependents that you have that are under the age of 17, which for Ray is going to be the 2000. We got the 2000 there. We're going to leave this information blank, sign and date. Now, let's switch it up a little bit. Let's say Ray is actually providing the upkeep for both Tamara and Tia, which we know is accurate. And let's say that he has permission to claim Tia on his return. Well, if both of the twins are under the age of 17, so he has 2 dependents, this number is going to become 4000. Line 3 also becomes 4000. And then he's still going to sign and date. And you see what we did there? When we add another dependent that's under the age of 17, we're just going to increase this by $2,000. Now, let's look at it a different way. Let's say Lisa's not working at all, so she has no income to file a tax return. Ray is actually providing the upkeep for Lisa, Tia, and Tamara. So he has three dependents. But Lisa's over the age of 16, right? So she's not under 17, no matter how much she may try to argue that she still looks young and she still looks like she's 17. So this isn't going to increase by 2,000 if we add Lisa. All other dependents that are over the age of 16, so 17 and up, qualify for the other dependent credit, which has a value of $500. So if you have a child that is over the age of 16 and they're yet a full-time student and you claim them, you would put a 500 here. Or if it is not a qualifying child, but it's still a qualifying individual, such as a parent, you would put the $500 here. So in our example right now with Ray, let's say that he's claiming everyone in his household. We have Raymond E. Campbell, social security number, address is 356 Go Home Roger Boulevard, Rochester, Michigan, 48306. And if you don't know, Rochester is the suburbs of Detroit, which is where they live. Mark this as head of household. We have $2,000 here for his daughter Tamara, and an additional $2,000 for Tia, which is her sister, which he provides more than half of the upkeep for, right? Because he's the one paying for food, he's the one paying for the roof over their heads. So we have that 4,000 here. So that's 2 times 2,000 because it's two dependents under the age of 17. And then we're going to also add in Lisa as his dependent because she has no income. He's providing more than half of her upkeep. So we have $500 here. And that's going to bring this total to $4,500. Now, again, we understand that in this example, if we're looking at realistically, Ray has his own company, right? He doesn't have a job. I just wanted to use him for an example so you would remember the example. But let's take this information out and let's say that Ray is working 2 jobs and it's just him and Tamara, okay? And let's say Tamara is 12 years old, all right? So if there are only 2 jobs and both of them are making close to the same amount, Ray could check this box. He could put $2,000 here for Tamara, which will make this $2,000. And then he could sign and date. However, it gets tricky if both the jobs aren't close to the same amount. So what we would do is we would actually go to page 4 and use this chart. Now, in the previous video, we used single or married filing separately, which is in the middle. And next week, we'll use the married filing jointly or qualifying surviving spouse. Now, in the year that Ray's wife died, he would be able to use qualifying surviving spouse, okay, and for the next year. However, it's been 2 years since his wife passed away, so he qualifies for head of household. So what we would have to do is find Ray's highest paying job. So he makes $85,000 at his highest paying job. So we're going to be right here. And he wanted to make it to 100,000, so he went and got a side gig that would pay him 20,000 for the year. So we're going to go across here, find 20,000, and we'll see where that intersects with the 85. Okay, so we have this $5,670. This is the amount of additional withholding that Ray needs to have because job 1 that makes $85,000 isn't going to take into consideration that he's making an additional 20. Okay, and his second job where he's making the 20 is not going to take into consideration that he's making 85 somewhere else. Okay, so that's why we have to have the additional withholding each paycheck. So now that we have the 5,670, excuse me, we're going to go back up and we don't need that amount withheld every paycheck. We just need to make sure at the end of the year that's the amount that's withheld. So we're going to take the 5,670 and divide it by the amount of pay periods that are left. So we're already gone throughout the year. Let's just say he decides to do this mid-year, okay? So instead of having 26 pay periods, which is what he would have if he gets paid every other week, he's going to actually have 13 left. So we're going to divide that $5,670 by 13, and that means that Ray needs to have an additional $436.15 withheld each pay period to make sure that he doesn't owe at the end of the year. Now, with that, because he has 2 separate jobs, he can choose to have this additional 436.15 withheld from his original job that makes it 85,000, or he can decide to break that in half and have $218 in oh, hang on, it's not changing. Sorry about that. He can decide to have $218.08 withheld from both jobs, so we still get the total of 436.15. Okay? It doesn't matter how you split it up. You just want to make sure that whatever number the additional withholding, that is going to be withheld by the end of the year. All right. So if you have any questions about how to fill this out, if I didn't cover an example that applies to you, then let me know down in the comments. If you are concerned because you filled out your W-4 and you're like, oh, they're not really withholding that much, check this out. For the tax year 2024, head of household has a standard deduction of $21,900. That means your first $21,900 is not going to be federally taxed. Okay? So if you make close to $30,000, you are okay if they're not withholding anything because only $8,100, so 8,100 is going to be taxed, which will put you in the 10% tax bracket. And if you have a child, your child tax credit will more than cover that. All right. I just want to put that out there because from the 2023 video, I had a lot of people filing head of household that were concerned because they felt like they did not have enough taxes withheld. All right. So I wanted to put that part in there. If you have any questions, as I said, make sure you let me know in the comments. If you did not have this filled out correctly in prior years and you have a tax bill that you seem to not be able to get a hold of, you can book a call with me at bowenstaxsolutions.com to see if you'll be a good fit for us to negotiate that debt with the IRS for you.